Welcome to the packed weekend video, which is called Are You Missing Tariffs? Now in the risk on turn, based on the resolution which is clearly by now apparent to everyone that there is no other shoe to drop right now. This does not mean that we would not have pullbacks. We did, and the point is to navigate through them as smoothly as we did with clients throughout the week. I will dive into which sectors are the most notable ones, examining as well stocks, and of course it's going to be about Bitcoin and real assets. So let's dive into the swing trading perspective, where Friday's hesitation, Friday's opening pullback was where we could catch almost 300 points swing trading gains. Yes, I was positioned ahead of China standard resolution before the now it's good time to buy stocks tweet, and as well this coincided with an interesting move that I have mapped with trading signals clients when it comes to real assets and cryptos and US dollar. Of course, this is as well a great time to profit on intraday basis, which is exactly what I have done in the latter part of the week, thanks to correct and very fast interpretation of Thursday's data. Remember, and it will be seen on the daily chart, I will be as well connecting to a couple of latest videos, and it is exactly about this what I had been covering for you at the end of the week. It's about PPI, retail sales and unemployment claims. How do these mix together with manufacturing not clearly cratering as badly as feared? So starting with the weekly perspective, we had seen a close at the highs. Does it mean that it's smooth sailing or not? You might have caught already the Moody's downgrade of US Treasuries, which is what's been responsible for the decline, for the closing decline in S&P 500 futures. However, we had seen a number of positive developments throughout the week, starting with good consequences, good vibes, turning into phase 1 announcement Monday when it comes to the weekend Switzerland negotiations with China and what it meant for US equities and risk taking, and the never look back gap that you can see very clearly on this chart. Then I have talked the necessity to have turned bullish on Thursday again, even in intraday terms, because even if market breadth had been weakening, the data and their implications overpowered the technical crew. And you know how I connect the macroeconomic reading, the fundamental reading, and what is happening on the technical front. So whether you call it that this is about the intersection between macroeconomic and political, is the same meaning, and this means that we have to keep in touch with all three elements, because this is not only what makes for success on swing trading basis, but on intraday basis as well. When it comes to sectoral view, you can understand why I was a bit hesitant at the start of Friday's session, and the session indeed turned out to be quite on a risk of basis, a risk of slant. Look at healthcare, look at United Health. Look at where real estate had gone and utilities. What did staples do? And contrast that to tech, financials, or communications with discretionaries. On a 5-day basis, this picture is way more clearer. So it gives you an idea that Friday we had experienced rotation, and a kind of rotation that did not even and could not even sell stocks lower, and on a closing futures basis my level 5950 had not been overcome, even though, and that's the Moody's announcement. Yeah. On a 30-day basis, which is basically after the Liberation Day, we can see that the key sectors of tech and discretionaries had been the leaders, and I really love how industrials had been doing. These are really clear risk-on signs, and what's been technically the most important thing, at the onset of the week, clear beat of 200-day moving average, which is what all clients had been positioned for. And this is the strength of positioning for the correct market outcome, given the great headline uncertainty that we had been having not just for weeks but for months. And always it's like that when a new admin takes over, and especially Trump. Now, this is tech. This is quite heavily skewed towards certain stocks, so you can see very nicely, for example, Microsoft standing out. It's as if tariffs did not happen there. And for good reason, this is one of my bullish stocks that we will be diving into further on. Semiconductors. Of course, there are great differences between such as Nvidia and AMD, but that is no surprise. Still riding the coattails of Mideast investments. Very great development, broadening, financials. You can see how in middle of April, in the latter half, the low had been comparatively high, and this sector had not been beaten down nearly as badly as the others, which is very sensible, very meaningful from the perspective of rebound and rebound's shape, which was another thing that contributed to stellar month and more that I have had with clients beyond equities. Communications, a little bit hidden thanks to all the Google antitrust and everything as well Meta had been experiencing, but still the sector has been and is doing fine. Discretionaries. Is it any wonder that in the presence of beaten down such data, thankfully, and this was part of the reason why I turned immediately bullish on Thursday again, retail sales, these hard data, not falling off the cliff in the least. Yet, discretionaries are kind of second guard in the advance, so for understandable reasons, but I would not say they are dragging the feet badly. Industrials, what a smashing side, and it pays to have a look at what had been the star performers within the industrials. It had not been those betting on global recession avoidance. We are not yet there where this sector would be given the all very clear. It had been defense stocks, defense, aerospace. You can see how greatly this one is performing and contrast that to my other bullish picks. Let's go with examples such as Boeing. Very clear breakout following the long pacing period after the prior long downtrend. Raytheon, another good pick, is certainly better one than Lockheed Martin. Moving on to Palantir. The stock only got ahead of itself and, accounting for reality, it took some time to resume rising again. Tesla, another case of pacing and moving into an uptrend with barely any pullback. You might remember that weeks ago I had done a positive video about Tesla pacing, and since then we had seen that there had been one notable pullback and off to the races. Nvidia going up. Again, very positive sign, and it clearly shows how far we had come from the start of the year and deep sea gap and everything. This is another stock worth watching, even though others are leading, and one of those that is in a slightly somewhat better position than Nvidia is AGO. Very nice. Last couple of days, very similar pattern to what Tesla does. I've been clear to clients what this McLaren summation index means, what are the consequences, and when, whether, and how, what it means for stocks, for S&P 500 index, when some kind of 200-day moving average on this chart is being overcome, whether we should even mention it or not really, what to focus on, and how I have been working them day by day and on intraday basis too, through the stock market advance and pullbacks and everything. Another very helpful chart. Today I'm presenting just one volatility metric, not my favorite ratio, that includes the forward-looking one. We are seeing ongoing volatility crash, so where is this going to stop, and what kind of a setback is the Moody's downgrade going to mean as we go into Monday's open? US dollar. Would you say with me that this is a backtest of the crucial 100 to 101 area, and it is stabilizing, which is very constructive, even if we are not seeing great international flows into the US stocks. Seeing US dollar stabilize is a very positive sign from the point of view of stock market stability, and it shows in the retreating volatility. It shows as well in what gold is doing, where I had caught the top and down on the veracity of the move, called it to be in a brand new market phase, and that's exactly what we had seen. Attempt to go higher, building up of negative divergences, and you can see that silver is in a somewhat different, technically different situation, and miners are more closely tracking, of course, gold as befits gold miners. So trading signals clients have been having all the calls, including Thursday, to be an update for both gold and silver within an otherwise distinct chart pattern distinct price action that is unfolding in both, and of course that had consequences for oil basing around the low 60s area and how it fits with Iranian nuclear deal negotiations, what is going to be happening in there, and so on and so on, including the peace initiative when it comes to Russia and the potential of harsher sanctions, as Trump has mentioned. Another perfect example of wins throughout this great month had been seen in cryptos. You remember that I had been both calling for the pump heading into the Sundays. One Sunday, early March, pump of the strategic reserve announcement, and then continued decline. I was aiming for, say, 72, 73,000 area, only 75,000 was reached, and on the consolidation of 85,000 that had been happening around the middle of April, I had called for an upswing, and you can see what kind of a price pattern we are building right now, and as it relates to MicroStrategy strategy price moves, what Ethereum is doing. These are great times, so make sure to join my services, premium ones, combining the quality daily analytics with intraday channels to make the most of the assets, markets, selection that you trade, and have a great weekend.